Investment in our economy leads to jobs, higher taxes, and better living standards. Part of this investment is made up of the tax that we pay each year. Basically, higher income earners contribute more money in tax and lower income earners contribute less. What most Australians don't realise, however, is that the same apportionment does not apply to companies. In 2012 to 2013 alone, companies shifted over $300 billion of revenue between their Australian arms to overseas parent or subsidiary companies. The result was $80 billion of diverted taxes in just 2 years alone. That's enough money to have wiped out the past 2 budget deficits. The Tax Justice Network report stated that of Australia's 200 largest publicly listed companies, 29% had an effective tax rate of 10% or less, and 14% had an effective tax rate of 0%. These are the companies that we support and invest in every day, including Google, IKEA, Apple, and Coca-Cola. Profitable corporations should shoulder the same portion of tax as the everyday working Australian. The use of an international structure is not in itself illegal, and as such, offshore structures and other arrangements are often used to avoid or evade tax liabilities. Many multinational companies transfer their income offshore to their subsidiary companies in countries with low tax rates, whilst at the same time moving their debts to high tax jurisdictions like Australia, where they get better deductions for debts or expenses. IKEA's corporate structures in Luxembourg formed part of the 2009 LuxLeaks scandal, in which documents detailed secret tax agreements. Between 2002 and 2013, IKEA Australia minimised its taxable profit by diverting over $900 million of operating costs to the IKEA Group in Luxembourg. This included risk agreement fees, franchise fees, intercompany loans, and interest payments. As a result, IKEA ended up with pre-tax profit of $103 million and paid taxes of only $31 million. Compared to Dick Smith Australia, IKEA Australia had an effective tax rate of 3%. Through collaboration with a growing network of Australian government and international partners, we are continually evolving our capability to deter, detect, and deal with corporations who deliberately attempt to cheat the Australian community. Such solutions include introducing an international corporate tax base, applying a worldwide group ratio to limit aggressive interest deductions, applying standard criteria for pricing intellectual property, and enhancing disclosure and transparency requirements between related companies. When commercial entities start paying a fair share of tax to our country, the government can afford more resources to better public education, medical treatment and advancement, infrastructure, and other aspects of the Australian public sector.